Hey everybody, I'm Allison Wiper from Center for Cultural Innovation. If you got any emails about this workshop after you registered, they were from me. Thanks for joining us. We're gonna maximize our time by handing things over to Jill and Claire as we have been in our previous workshops on PPP and the CARES Act. But you'll get something from me following this workshop, and it will include a link to watch a recording, and I do like sort of a transcript of the Q&A as best I can and kind of group the questions by type. So if you missed something and you aren't able to take notes, you should be able to go back and get that information. And we'll also ask you guys for feedback on this workshop. I'll also point you towards, if you did not attend the previous workshops, we're putting them all up on our YouTube channel. It's CCI Arts YouTube channel, so I'll send you a link to that playlist as well. So without further ado, as folks are coming in, I'll let you guys lay the ground rules for the Q&A and how you want to proceed. Thank you.
Thanks, Allison.
Thanks, Allison.
Well, we are excited and also a little bit disappointed to be back with you again. We were joking with Allison earlier that Congress just doesn't want us to break up. So I'm Jill James, and I'm the CEO and founder of SIF Industries. And this is our third webinar on the PPP. The first one was overall funding. The previous one was what we knew about forgiveness. And the night after we had our webinar on a Friday, the forgiveness application came out and a 26-page FAQ came out. So a lot of what we talked about is the same. We just have more details. But we're going to go through that application in detail. But first, I'm going to turn it over to Claire to introduce herself.
Hi, everyone. My name is Claire Van Holland. I am the CEO and founder of CV Ledger. And so for those of you who have questions along the way, we encourage you to please pop all of those into the Q&A and not the chat. And if you do, by chance, put it in chat, Allison will gently guide you over to the Q&A so that we can get to all of your questions over the course. But I encourage everyone to please just kind of hold off as much as possible, because there is a ton of information that we'll be going through. So before you fire off anything, hold off and see. We might already answer those questions. And if we still haven't, that is a perfect time to pop into Q&A.
Mm-hmm. And Allison did share with us the questions that you all have sent over as part of the registration. So we tried to cover as many of those as possible within the context, but we know you always have clarifications to ask about specific to you or specific to the industry or part of the industry that you're in. So as Claire mentioned, please pop those into the Q&A. We typically, get through this in about an hour so that we have 30 minutes for questions. And we're going to try to do that again today. And I apologize in advance for the math, but math. So I'm going to go ahead and share my screen so we can get started. There we go. Bear with me. Okay. All right. Allison, would you like me to turn on closed captioning for this? Is that something you want for your community?
It never hurts, sure. Accessibility is great.
All right, so captions are on. So if any of you are in a spot where you need to mute or something, you can kind of read along. So what we're gonna go over today, Claire and I introduced ourselves. You see here, got some resources. You can follow us. I send out a regular newsletter update for those of you who have been on this before. You may be getting those, both about the PPP and general small business topics. But this is what we're going to cover today. But I do want to start by saying, this is very technical, and it's a little bit it will make your brain a little bit tired, or maybe a lot tired. So if this week you are just not feeling like you can do this, we are sending out the recording, we're sending out the materials, we're here for questions afterward. We understand that there's been many things that are more important than PPP forgiveness this week that may be on your mind. And this is important to you as well. But if this is just not the day for you to do this, follow along. If you know other folks that didn't join because this was too taxing, please feel welcome to share this with them. So what we're going to go over today is there is a new legislative action that passed the Senate yesterday called the Payroll Protection Program Flexibility Act. So we're going to go over the newest and greatest. Hopefully during this webinar, the president will sign it. It will become law. We're going to go over what that means and what we know and don't know from that new legislation. We're going to go over through this delightful forgiveness application without you having to look at this piece of paper, but kind of give you a guide to go through it and understand the information that you'll need, the calculations you'll need to do, the data you'll need, some fine print on commonly asked questions, and then some best practices of how to track this in your accounting and in your payroll systems to make this easier to fill out. And just a reminder, up in here, this is where you drop your questions as they come up, and we'll jump in as we go, but mostly at the end. So you are in the right place if you are self-employed, independent contractor, freelancer, one-person company, a business owner of a company of any legal structure that has W-2 payroll or owner's distributions, or a leader of a 501c3 tribal or veterans organization. This program runs the gamut. All of these are eligible, and we'll try to get into as many details as we can about each. The world of PPP really splits into employee, not employee. So a lot of what we'll talk about today is what you need to do if you have W-2 employees to maximize your forgiveness. And just a reminder, you will all get the session recording, the presentation, links to anything we reference, and you're welcome to share these with your fellow business owners. If you want to take screenshots as we go on your Mac, that's Shift-Command-3. You can grab any screen if you want this immediately and before we send everything out. You can follow us up with us. Our contact information is at the end with any specific questions. Yeah, if I know we're all quiet on social media this week, so that part is up to you. But please feel welcome to share this if you know it would benefit someone else. Okay, so Payroll Protection Program Flexibility Act. I made the date for this tomorrow because we are expecting, it is no risk to the president to sign it. It passed with one dissent between all of Congress. So we expect this will be signed either today or tomorrow. So what it is, this is so new, this is actually the official congressional record because there aren't very many sources on it yet. Journalists were just starting to write about it this morning. But what Congress has passed is a bunch of rules making it more flexible and easier to use all of your PPP funds with forgiveness. So hopefully, again, by the end of the day, the president will have signed this, if not tomorrow. So I put here some of the changes, just a table of them to make it easy to see what's changed. So in the original PPP, you had an 8-week use period. The flexibility, the PPPFA will give you 24 weeks. You have to choose, you are either on the 8-week track or the 24-week track. There's nothing in between. And you have 24 weeks to use or until the end of the year. So for most of us that have gotten a loan already, obviously 24 weeks is going to fall within 2020. For people still getting loans who may not finish their underwriting until possibly after June 30th, then 12/31 would be the cutoff. Payroll expenses, previously you had to use 75% of the funds for payroll expenses. They've dropped that down to 60, which means you can use 40% for qualified expenses. For workforce restoration, the previous bill said you had to hire everyone back by June 30th. If you are on the 24-week track, you now get till December 31st. So for those of you who are running restaurants, hair salons, theaters, anything that has not been allowed to open up to this point or has only been allowed to open recently, this will give you more time and more weeks to restore your staff, to bring your business back as allowed. The payback period has been extended out from 2 years to 5 years. So if you were worried, if you have a larger loan and you were concerned that it's a pretty quick payback and your payments could be quite large, this will stretch them out over more time for any amount that isn't forgiven. Another kind of unrelated but nice perk is if you were in the PPP program, you couldn't participate in the IRS's payroll tax deferral. Now you can. So if you have employees and you're paying federal payroll tax, you can defer those payments out until next year. which means like giving you that extra 7% of contribution that you can keep in your business and use as working capital right now. So look into this. Your most payroll systems have made this a button that you just go log in and you push and you say, I want to defer, and they instantly file everything for you. So if that is something you want to do, you will have to pay it in the future, but you can defer your payroll taxes for the rest of the year, your federal payroll taxes. And then the repayment deferral was 6 months from the start of your loan date. Now your deferral, you won't have to make a payment until forgiveness is determined, which is a nice feature because again, we'll go over the timelines, but you know, it could be a 5-month timeline to get forgiveness determined. So you'd be paying against a full amount until this happens. So this way, repayment aligns with knowing what you actually have to repay. And of course we need fine print or it wouldn't be the PPP. So thanks to Ron Johnson of Wisconsin, the program loan application is still June 30th. He would not sign on. 100% of senators were required. So he was like, if there's more time, I'm not signing. So your loan application deadline is still June 30th. So if you haven't joined the program yet, you only have the next 3.5 weeks to do so. You have to opt in to use the 24-week use period. Otherwise, your lender will assume that you are going to fulfill the 8-week period. 60% must be used for payroll or your forgivability goes to 0. So if that's going to be problematic for you, again, think this through, but it is more flexible than the 75 that we had before. And on that front, both Senators Rubio and Susan Collins came out and said they were going to continue working on restoring a sliding scale for this. So it's a change that we would expect to see come in, but they didn't want to delay passing the bill in order to fight out whether it would be a sliding scale. So for now, it is, if you don't hit 60%, your forgivability goes to 0. A clarification on hire backs. You can get credit, and we'll go over this in detail a little bit later, but you can get credit if the government has restricted your reopening, right? Either by capacity in your business, number of clients you can have at a time. If that is restricted and it limits your capacity to hire back and reopen, you will not be penalized for those people that you can't rehire that you don't have work for. You can add them back into your forgiveness. And the final one, they did not change the allowed expenses that are on the forgiveness document. So it's still rent, leases, mortgage interest, and utilities. There's a little bit more clarification from the application on exactly what those are. But there was some conversation about being able to add PPE that you had to buy for your business to reopen. That was not added. So all of the things that were qualified expenses on Tuesday are qualified expenses today. Okay, what we don't know yet is how the SBA will implement and interpret these rules. It's typically taken the SBA about 5 business days, and I don't know why this is, but they like to send things out late on Friday nights. It's not the email you want to get at 10 o'clock on a Friday night, but that seems to be when they send them out. So my guess is there will be an FAQ update on this, by next Friday night. So there are a number of fine details that we may not have here, but I at least wanted to go over this with you so you understood the broad strokes. One of the big things we don't understand yet is how these changes affect sole proprietor or business owners' equity replacement, that payroll substitute of 8 weeks that you were allowed to take under 8 weeks. We don't know if you're going to be eligible for the 24-week extension. So that's something that I would expect to be quickly clarified, but until that's clarified, assume you're still on 8 weeks. And then the last is whether you can apply forgiveness at whatever moment you've exhausted the funds and you've met your rehiring criteria, or if you actually have to wait till December 31st. So we'll look for more refinement in that from the SBA. All right, and there is still money left. So as of last Friday, there was still $100 billion in funding remaining. So if you know someone who would benefit now that they have a longer period to use the money, more time to hire people back, encourage them to apply as soon as possible. The rest of the month until that funding is exhausted, the program will be open, but applications close on June 30th. If you're not through underwriting by June 30th, that's different. But you have to get your initial application in by June 30th. that will be the last day. Thank you, Ron Johnson. So an overview of the timeline and requirements. There's a little bit of update to this from the last time we met. So either your 8 or 24 weeks begins on the day your bank deposits the loan funds, unless you choose the alternate, an alternate period based on your payroll. And we'll get into that again a little bit more in a minute. The rehiring deadline now, if you're on 24 weeks, can be December 31st. And then you still have 90 days to provide your forgiveness request and proof to your lender. And then your lender has 60 days to get back to you. Okay, so let's get into this forgiveness application. It's super fun. Okay, so a note on this section, we made a couple of assumptions based on these changes. The new 60-40 proportion, we are just assuming that anything that said 70-25, you can directly apply 60-40. That just seems like the most logical way to apply it. And then we don't have any timelines or forgiveness calculators for 24-week users yet. That will have to come in clarification. But if you're planning to use your funds still within the original 8-week period, we expect the rules to apply in this application as is, with the exception of you're going for a 60% payroll, qualified payroll usage instead of a 75. So we're going through this as if you are still on the 8-week program, because for those of you who are on the 8-week clock and plan to use the funds, again, it's binary. You either use the funds in 8 weeks or you use the funds in 24 weeks. So we're going to assume that those of you who've been progressing as if you have to use the funds in 8 weeks will be going through this application sometime, later this month or in the beginning of July. Okay, so the forgiveness application, which I just showed you, it's 11-page document. It's about 3 or 4 pages of actual work and a lot of explanation. Your lender can require more information than this, but this is the calculation that the SBA has provided. This is the URL for it, sba.gov. It's a PDF. You can download it. If you want to follow along with where I'm at, you can grab it right now. And again, we do expect an iteration of this based on the new law. But for now, we'll go through this so you understand where we're at today. Okay, so page 2 of the application in detail lists everything, every expense you can have for forgiveness. So there's all eligible payroll costs here and all eligible non-payroll costs here explicitly spelled out. And then page 10 details what forms of documentation can be used in each category. The SBA has offered more than one option for each proof point. So if you don't have formal payroll, it's detailed out, for example, that you can use bank account statements, canceled checks, or payment receipts. So for each one, there's an assumption of some people may have these systems, some people may not. In some cases, it says where you can use reports from your accounting system. So if you set this up as Claire has recommended, and we'll go through a little bit later, you would be able to just run a report, put it with your application, and provide the additional proof points. It's laid out a little bit weird. I know, not shocking. So when we think about how to approach this, there's basically the split is if you have employees, this is a much more complicated application for you. If you do not have employees, this is much easier for you because you're just basically filling out the portions on owners and what you used as business expenses. So, I'll go over with a little bit more detail. There's sort of a quick way for sole proprietors to go through this. But if you have employees, just plan that this is a rather complicated calculation, especially if you have a lot of employees over the last year. Also understand that your maximum loan calculation, the way you applied for the money, might be different than your eligibility calculation. That's okay. If you were granted the money at the time, the rules have changed throughout. The bank and the SBA signed off on a guarantee that that was okay for you to have. As long as that amount of money is less than $2 million, you're cleared of any need requirements. We covered this a bit in the last time, but there is a safe harbor for any loan made under $2 million. They've just assumed any business that's smaller then that, and needs the money. So you're not going to have to prove that you did the calculation right or that you got the right amount of money, right? What we do have to prove is that you've used it in alignment with the allowances to get forgiveness. So this whole process is keyed to determining if you've met the payroll requirement, which is now 60%, as well as keeping the correct number of employees at the correct wages. You need to provide evidence of your qualified non-payroll expenses, but you're not going to need to list them out or in detail, right? It's in summary, and then you provide the backup. So the real focus here is on getting the payroll data and employee data that supports your claim that you met the 60%. So in terms of like the technical way to approach this, the calculations you need to do first are at the end, and you're going to work your way forward in the application. So first we'll talk about your FTE counting method. How do you count your employees? Then there's a worksheet at the back. That's the worksheets are on page 9, but all the explanation of them is on pages 7 and 8. You don't have to return the Schedule A worksheet. It's for you, but you do have to retain it so that if the SBA or your lender asks, how did you get those numbers, you can show it to them. Again, this is unlikely to come up at the level that most of you have for loans, but you do have to keep it. So once you've done the worksheet, then you'll do Schedule A, which is in the middle. And then the first page, the calculation form, you'll do last. Okay, so information you're going to need is whether you're using your loan funding date as the period from the first day the loan was in your bank account plus 8 weeks, or the alternate payroll period. And this, I think, is since our last webinar, this came out with the forgiveness application. You are allowed to shift the dates of your 8 weeks to start on the first day of your next pay period after you got the money. So we'll reference that as an alternate payroll period or an alternate loan period. So that is completely allowed. If you want to align this to 4 payrolls and that lines up, it makes sense to make it the first day of your next payroll. There are several options for which employment period you're going to use. I'll go through those in more detail, but you will need to decide that before you get started. You will need a list of all your full-time and part-time W-2 employees, no 1099s, just W-2s, and their compensation as of February 15th, 2020. And then we have to split them into people who had made less in annualized cash contribution than $100,000 and more. And any employee who had their wages reduced by more than 25% from where they were at in Q1 2020, as long as that wage reduction was under $100,000. So there's no penalty if you had people making more than $100,000 annualized. You can bring them down to $100,000. You don't have to report that. But if the person was at $100,000 or less and you brought their salary down by at least 25%, that's something we have to note on the forgiveness application. And then you need the same list as of June 30th, 2020, or the end of your 24-week period. Okay, so to recap, most of you have been through what the eligible payroll expenses are at this point, but I just want to recap for folks that are coming for the first time. Eligible payroll expenses are your wages, salaries, commissions, tips, capped at $100,000 annualized. So in an 8-week period, this means that you earned $15,385. Doesn't matter when it came in, how, anytime within that 8 weeks, that's the maximum that you can be paid in this program. So if you were paid more, you put in $15,385. Above and beyond the $100,000 cap, you can also count any sick leave or paid time off that was not covered under the FFCRA. So if someone just got the flu and had to take some days off, you can count that. You can also count maternity leaves, medical leaves, things like that that you paid for. Any group health benefits, your state and local payroll tax, your employer contributions to retirement plans. So all of those are above and beyond. So it's not calculated per employee, it's the total amount that you spent on those things. And that's all bundled together to get to your 60% payroll contribution. The one note on this is that on the wages and salaries calculation, it doesn't include federal employer payroll tax. And if you are using a payroll system, most of them have set up a worksheet, a report that you can download that takes that out and tells you the number that you spent. If you're running your group health benefits and your retirement all through one place, many of them have constructed a comprehensive worksheet that they will run from the system in order for you to know exactly where you're at in terms of using your funds. Other qualified expenses, these are the non-payroll expenses. So phone, mobile, internet, power, gas, water, trash. Transportation is also explicitly called out here. So if you're paying mileage before the end of your 8-week period, make sure to get those mileage requests in from your employees. Their mileage reimbursements or any transportation credits, those are things that you can count toward your expenses. Rent or lease obligation. So this is actually two things. I think in the past we've talked about it as your lease being your rent. In the new application, it clarifies that your rent, if you had the lease established before February 15th, your rent is eligible. There are also separate, lease obligations are separate. So this is a place where we have to go a little bit into the FAQ to look for it, but if you have leased equipment, leased vehicles that you are paying for through the business, we can look at whether those can be included. And then also business mortgage interest, as long as you establish that mortgage before February 15th. And be aware, if you refinanced, you reset the clock. So if you refinance sometime after February 15th, that's going to take the mortgage interest off the table. Okay, so now we'll get into the stepwise going through the application. So for your FTE counting method, this is how you figure out, did you have enough people on staff or how many people did you have on staff when you started? There's a counting methodology, and how many do you have at the end of the period? And did you maintain sufficient staffing levels? So the application gives you two options for calculating your FTEs. If you have a lot of people who work under 20 hours, the simple calculation is probably better for you. If you have a lot of part-time people who work more than 20 hours, it might be worth the work to go through fractional. So in simple, the full-time hours they've set at 40 hours, right? So I know for benefits and other things, you might be at 24 as a company or at 30. For purposes of the PPE, it is a bright line of 40 hours. So for those who worked 40 hours or more in the simple case, you assign them a 1. And for those who work less, you assign them a 0.5, right? It's half a person or full person. And that's the simplest way to go through if you have a lot of employees or you are kind of not wanting to tax yourself by going through this. You can simply assign a 1 or a half through your entire payroll system, and that'll give you your FTE number. If that's unfavorable to you when you work through this, the fractional option may be a better option for you. For anyone who worked over 40 hours, you assign them a 1. For anyone who worked less, you take their average hours for the period and you divide it by 40 and you give them each a fractional number, right? So you can see the benefit if you have people who are working 30 or 35 hours. Fractional may be better for you rather than taking them down to a half, because effectively they were full-time for you. So you'd rather get that higher 0.75, 0.88 into your calculation. But it is more work. If you don't have a lot of employees, it's not. If you do have, this is going to be a process. And there may be, if you have a larger number of employees, it may be something that your payroll system can calculate for you as well. Okay, so once you have that FTE counting, there are some people that you can include that we've gotten more specificity on who's in and who's out, people who have changed within your company. If someone was fired for cause, you can count them in your forgiveness. If someone resigned voluntarily during this period, you can also count them. If the employee requested to have their hours reduced, you didn't tell them they were having their hours reduced, but they requested it and it was granted, you can also count them at their original count for hours or their original FTE. And the last one is if they were offered their job back but declined to return, you also get to count them at the level that they were before you laid them off. One caveat on that, if you are concerned about your employees being able to continue to accept unemployment, if you offer them their job back and they decline to return, it's a good possibility they will lose unemployment benefits. So if that's something you want to be conscientious of, this may be a balancing act to figure out, like, do you want to do this? Another development here, if a departed employee was replaced by an equivalent new employee, you're paying the person the same salary or more, and it's the same number of hours, you can swap them in. So I know last time we talked about this, there was like a bright line cutoff of this list of people and this list of people. Now it's counts, right? It's counts of hours and wages. So if you have a substitute person that you hired after March 1st, which used to be our date, if you hired them after March 1st and it was a replacement for someone who was in an existing job, then, and you had that JD open or they were in the previous year, you can count that person toward your forgiveness. If a head goes unfilled also because someone resigned or left for one of these reasons and the head is unfilled currently, you can also count your previous employee. So this should help you fill in some of those FTE adjustments where there are a lot of points of concern of who counted and who didn't count and was it exactly the same. Okay, you also have to choose a time period. And in this one, you get to choose the most beneficial calculation of time for you. There are two things you can choose. You can either choose for your start date, the date that you got the money. And in the application, this is called covered period. So it's called covered period. It's from your loan funding date plus 8 weeks. If you see alternate covered period, that means you started on the first day of the next pay period. And you get to choose. So if you want to keep the date that you got the funds and 8 weeks from there works great for you, you can do that. If you'd like to shift out by a few days to the start of your next pay period, as long as you are paying weekly, bi-weekly, or semi-monthly, all of that is okay. If you pay monthly, you can't use the alternate covered period. So that's your first choice on time. The second choice on time is your FTE period, so the look back. So you are looking against your current period employees on June 30th. The look back is either against February 15th to June 30th of last year, so the similar period a year ago. You can also use January 1 to February 29th of this year, if that's a better comparison for you. And if you're a seasonal employer, you can use any of the two above, or you can choose to use any 12 weeks in between May 1st and September 15th of last year. So unfortunately, seasonality is only being considered for summer employees, but hopefully with the choices here, if you're a winter seasonality, maybe the January or the previous year date is better for you. So again, seasonal can choose any of these three. If you are not seasonal, either of the first two, it's up to you what's more beneficial to you for matching your FTE periods. Okay, so now we'll get into actually filling in the application. So the Schedule A worksheet, which is on page 9, has several tables on it. Sorry, this is the part where you're gonna have to do math. I apologize in advance for the math, but it's required. Okay, so the exception on this, on the Schedule A worksheet, if you're an owner, employee, self-employed individual, or general partner of the business, your compensation does not go into Schedule A. So if you're a one-person business, you don't have to do Schedule A. If you're the owner, you're also an employee, your compensation does not go in, or if you're a general partner. Your compensation is still capped, but it's going to be counted on Schedule A in total based on the number of individuals that you have. So again, make sure you leave out anyone who's an owner over 20% in your company. So the Schedule A worksheet, in the first table, you're going to list all the employees who worked for you during the loan period who received less than $100,000. So for the 8 weeks, less than $15,385 in cash. You're going to assign their average FTE, so whether it's 1 or a half or 1 and a fraction, And then you're going to note if anyone had a salary reduction of more than 25% from what they were paid in Q1 of 2020, and you are not intending to restore their salary by June 30th. Okay, then you have to write that in. But if you're planning to restore salaries by June 30th on the 8-week plan, you do not have to record any salary reductions. So if someone has worked for you for less than a year, you use a proportion to annualize them to a full year pay period for comparison purposes. And once you have these 3 pieces in, you're going to add up your boxes 1, 2, and 3. Those are going to move on to the other worksheet. And then the second table is for people who have made more than $100,000 in cash compensation. So you list those employees. You're going to put in $15,385 for every employee, regardless of what they made, because that's the cap that you can claim in their cash compensation. You're going to add their average FTE number, again, 1 or half or 1 and a fraction, and then you're going to add up those totals. Okay. The third section of the worksheet is an FTE reduction safe harbor. So this is a short calculation to tell you if you have to do more work on figuring out if you met the rehiring criteria or not. And basically, this is where if you can get to the whole number 1 or higher, you're in good shape. So if you follow the guidelines to compare whether you've met the salary requirements for enough of the original wages and salaries. So if you follow through the calculation, if you get 1.0 or higher, you're at safe harbor and you've met all your payroll requirements. If you get less than 1.0, then there's some additional work to do on Schedule A to see if you have to have a reduction quotient, which is the percentage that we're going to reduce the total amount of your forgiveness. So there's a series of, I believe, 1, 2, 3, 5 steps. Right, so you're going to enter average FTE from February 15th to April 26th using the same method as above, which is why you need your current period payroll. Let's see, there are a couple FTE steps here. If one is greater than the other, you get to skip ahead and then enter the total FTE if it's 1 or more. And there is quite a bit of instruction on this, but it's all based on who you had on your payroll from February 15th to April 26th, and then at the end of the period. Okay, so once you've done all of that, you're going to take the numbers that you came up with from boxes 1, 2, 3, 4, 5, and those are lines 1, 2, 3, 4, 5 of Schedule A. That's on page 6. And then this is where we get into the rest of the payroll expenses that qualify above and beyond compensation. So there is a line in summary for all of the total paid for employee group health insurance, all paid for employee retirement plan during the period, the total for your state and local sales tax, or state and local payroll taxes. On line 9, this is where your owner compensation comes in. On line 9, you put the compensation to owners, owner employees, self-employed individuals, or any general partners. And again, if you are a larger company, this is for people over 20% of ownership or over 20% of partnership, just like the people these are the people you had to disclose in the application period as owning more than 20% of the company. So they go on these lines. Let's see, on line 10, you add it all up. That's your total payroll cost, right? So it's got everything you did for employees plus all those additional qualifying costs. If you did not reach safe harbor on your Schedule A worksheet, then you're going to complete lines 11 through 13 to find out is your total, like what's your total reduction, right? They're calling it your FTE reduction quotient. This is the percentage that you're going to multiply your numbers by to find out how much forgiveness you get. All right, are you still with me? This is a lot. And then finally, you're going to get to the first page of data entry, which is the calculation form. You're going to bring all of this forward. The top section is a recap for your lender. You'll need some numbers in terms of the total number of W-2 employees that you had at the time you applied and the time you're applying for forgiveness. No other data, just the numbers. If you received an EIDL advance grant, you have to disclose it and how much you received. It reduces by the total amount your payroll forgiveness. You need to know what payroll schedule you're on, biweekly, semi-monthly, monthly, etc. And then if you have your chosen period, you either enter the dates of the covered period, which is the first day of your loan that you received your loan in the bank, plus 8 weeks, or your alternative payroll period, which is the first day of your next payroll period through 8 weeks. And then line 1, you're bringing all of that payroll cost forward from Schedule A. And this is where you enter your non-payroll qualified costs. So you're going to enter your mortgage interest for the period, those rent and lease payments, it's all bundled together, just a single number, and the total number of utility payments. So again, you don't have to break it out by, just a summary. So you have this set up in your accounting system, you're just going to be able to pull these numbers for the period and fill them in on this application. Lines 5 through 7 are the work you did on Schedule A on your FTE and wage reduction impacts. And then lines 8 through 10, there are 3 ways they look at your possible forgiveness amounts. You have to choose the least favorable of these. So we'll go into those. Your possible forgiveness amounts are the lowest number of these 3. So either your wage and salary reduction times the reduction quotient, the total amount of your loan, or that you hit the 60% cost requirement. So if 1 or 2 is the smallest amount, then that's just a straight number of how much it can be your forgiveness. Under the new rules, if you don't meet the 3rd criteria, your total forgiveness goes to 0. So if your payroll cost 60% requirement is the smallest number, then none of your loan is going to be forgivable. So with these rules, it's really important that you're tracking your payroll costs. Again, this is that whole number, right? All of the employment costs plus your benefits, your retirement program, your payroll taxes, adding that all in. And as long as you hit 60%, which most of you are trying to track to 75, so 60 shouldn't be a problem. But if you don't hit 60%, they're saying then forgiveness goes to 0. So really something to be careful and make sure you're tracking. Okay, that's the whole application. If you're self-employed, if you haven't done this yet, your 8 weeks of payroll are based on your 2019 Schedule C, and you're looking at the income or profit from your business activities. You're going to take that whole year number from 2019 and multiply it by 0.154, which is 8 weeks out of the 52, which is your owner's actual equity substitute compensation period. This is your replacement pay. You can just write yourself a check or transfer that amount directly into your personal bank account, and that's the allowed payment amount. So I have an example here of what that would be based on the $10,000. But you transfer this to yourself and you've met your payroll requirement, and this is the number you're going to put in on line 9 of the Schedule A. In terms of you using the rest of the funds, same rules apply, but the expenses that you're listing as personal expenses have to be related to the business, and they have to have been in place before February 15th. And this is a point of clarification. I think you may have some questions on this, so we can get into this a little bit more. We don't know yet if you're going to be allowed to extend to the 24-week period in order to just pay yourself the rest of the money over more weeks. That, you know, obviously would be a very interesting development and good for most of us that are single owner businesses. But we don't know if that's the answer yet. So if not, you're going to have to, you know, use the balance on this. Okay, so the fine print. Just a reminder, the 8-week clock starts either the day the lender deposits the funds in your bank account or the first day of the next pay period. That's your choice. That is an update since the last time we talked about this. If you don't use your money within 8 weeks, if you're not able to use the funds because you've been closed, you're not able to actually pay employees, is probably a good idea for you to opt into the 24-week timeline. If you're close and you don't have, you're like in the next payroll, there's just a little bit of money left, it's probably in your best interest to either try to use that money to try to get it into the forgiveness level, or if possible, if you're okay with paying a bit back, it can be left and then it's unrestricted in how you use it. We talked about this a little bit about if your employees don't want to return, the documentation that you have to do, you have to make the offer in writing for the same job at the same wage as when you laid them off. And then the former employee has to decline to return in writing. So if you have the offer and the decline, you keep them together, they go with your forgiveness paperwork, the employee counts as returned for forgiveness. And this is new based on yesterday's legislation. If you can't reopen or your capacity is restricted, you can document that you were not able to rehire due to government-related operating or COVID-19 related constraints. Most of you will be opting into the 24-week program. We're on uncharted territory here, so this is something we'll have to update. We don't know exactly how, if you can self-certify or if it's certain industries. This is a place where we'll have to keep an eye on what the SBA reports in the next few days in terms of how they're going to assess your impact by COVID-19 government restrictions. If you don't have enough qualified expenses to use the other 40%, it's okay to use up to 100% in payroll. And if you do need a longer period to use 100% for payroll, it may make sense for you to opt into the longer 24-week period, giving you additional weeks and periods to use the rest of the money. So if we get through all of this and part of your loan is not forgiven, it is possible to get partial forgiveness as long as you hit that 60% payroll cost threshold. The balance of the loan and any accrued interest will need to be paid back. But again, the date of that is pushed off until after we know what amount is forgiven. So you would not have to make a payment until you know what amount is not being forgiven. And again, that's going to be split out over 5 years for repayment. But if you really don't want to have a loan balance at the end of this period and you've been tracking your expenses, you can take the money that's left in the account and immediately make a payment back to the bank. There's no penalty for prepayment. So if you feel like you've tracked this accurately, you've met your 60%, you don't want to accrue any more interest, but you have some money left at the end of the 8 weeks, just simply get in contact with your lender and let them know that you want to make a principal payment and make that payment back to the bank. If you decide to keep the balance, we're still assuming you have to use it for qualified expenses, but that's a place where we haven't gotten 100% clarification yet. The loan term will now be 5 years at 1%, and then interest has started to accrue on 5/15. So if you already have a loan, you're already accruing interest, but you don't have to make a payment until forgiveness is determined. And as we noted just previously, that EIDL advance, which is the unrestricted grant of up to $10,000 from the other funding program, it does count against your PPP loan forgiveness. So if you got $1,000 or $2,000 from that program, that's instantly $1,000 or $2,000 that will not be forgiven from your PPP loan. So even if you do everything else right, you would still owe that money back. So if that's going to be an issue, we recommend that you set the grant money aside or even make that payment to your lender now so you're not accruing interest against that amount. Okay, some best practices for forgiveness. Set up a new bank account, a dedicated bank account to receive the money. That ensures that part of the portion that you're trying to get forgiven sits separately from the rest of the account. It lets you use your bank statement more clearly in order for showing forgiveness, right? If you're paying out your payroll amounts from there, if you're paying out your bills from there, there's just gonna be clear matching numbers against that bank account of where the money went. So it will make it easier for your bank to reconcile it. If you can't open a new bank account, if you have an extra checking or savings account that you're not using, put it in there. the biggest thing just be able to use a single bank statement in order to show where the money went. And in terms of recording it in your bookkeeping system, Claire's recommendation is that you make new categories designated to your PPP expenses. So those that list transportation, rent, utility, rent, utilities, total gap, mortgage interest, right? You would make those your categories so that it aligns to the summaries that you need on your Schedule C and your calculation form. Okay. Holy cow, that was a lot for 50 minutes. So that's kind of the broad strokes of what's going on with the forgiveness application. I'm sure you have a lot of questions. So we'll open it up from here. And Claire, you want to jump into the Q&A?
Yeah, we've got one open question so far.
Okay.
The question is, if we got the EIDL loan, do we add this amount to the PPP amount to calculate the total that can be used for payroll and for forgiveness?
So no, we don't add it in. It's netted out of the amount you can have for forgiveness, right? So if you decide to use it, you can use it for any business expense. It's not restricted to what you need to use it for. But if you do decide to use it, there's a place right at the top of the forgiveness forms that says, did you get a grant and how much was it? And that amount's subtracted from your eligible forgiveness. So you will have to pay the money back in the future, which, you know, may be a good trade-off for you depending on where you're at with your business right now. But if you don't want that to be the case, then you need to have that money set aside to pay back the non-forgiven portion.
Can sole proprietors use retirement contributions as part of the calculations?
Well, Claire, I'm going to see if you have a different take on this. So my take on this was yes, but I have had an astounding number of people reach out to me and say their CPA said no. I can't personally find anything that says, as a sole proprietor, if you were already contributing to a SEP, that you can't continue to do it. But there are definitely accountants who don't want you to do that. So
yeah, I would actually fully agree with that answer. So my recommendation is, as long as you were already contributing to the SEP prior to, let's just say, to be safe, February 15th of this year. So that was already something in place as of 2020, yes. But if it was anything later than that, I would be a little bit hesitant to include it, especially with all of these shifting rules. Again, that can probably change. As we know, these things are changing on almost a daily basis. But just to be super duper safe, I would say, as long as that was something already in place, not only just as of 2020, but as of February 15th, that should be countable for now. Okay, would you advise a theater company to get this loan? We had to let go of all of our performers and probably can't perform again till next year. My immediate answer to that would be yes, especially with the new guidelines, 60-40. I think we'll be able to, the 40% especially, will be able to use towards operating expenses allowed, of course. If you can find a way to divvy it up or work with someone to help you kind of just budget out all of that money, assuming that you haven't already gotten it, yes. Things are changing on a daily basis. I don't know if you want to add anything to that, Jill.
My addition to that would be, I know you didn't ask your question in terms of taking on debt for the business, but this is a way to get the money in your account by applying now. You can ultimately decide not to use it, but there is only this window of time until the funds are gone to get this allocation. We're not expecting more federal level relief after this. So I would personally say it's better to have the option and decide that you don't need it than to not take the loan and then realize that you could have used half of it and gotten it forgiven, you know, and would be willing to repay the second half in order to have that coverage to keep your business going. So I look at it as give yourself the option if you're not sure, and you can always pay the money back with a small amount of interest being all that you pay, right? Because there's no prepayment to just give the money back to the bank and say you changed your mind.
Okay, so the next question, asking whether or not sole proprietors have to put together a payment schedule specific to the allocation of payroll funds, or can a lump sum just be put into another account in one fell swoop?
Claire told me I could write a check to myself.
You absolutely can. I mean, as of now, you are able to, absolutely. At the very beginning of this, I would have advised a little bit differently and just try to stay on the side of safe. But the more of my tax colleagues that I speak to about this particular issue, more and more of them are okay with doing a distribution in one single lump sum, whether that is through payroll or just a direct draw from an account transfer from business into personal.
Right. So the note on that would be, you just want to make sure clearly in your records that you have made that your 8-week owner's equity replacement payroll, and that number lines up, and that you have notation on it that that's what you used it for.
So there is a question about EIDG, or the grant, being treated the same as EIDL because their bank statement says EIDG, whereas the forgiveness form talks about the EIDL. So the confusion, I get it. The EIDG, that is a grant. So when you were looking at the form, the forgiveness form that references EIDL, that is not one and the same. The EIDG, that's really hard for me to say, that is totally separate. That is not an amount that you're going to state anywhere on your forgiveness form. An EIDL is the full loan amount that isn't going to be, a multiple of 1,000. I don't know if I made that more confusing, but no, the grant is not the same as the loan. The grant is simply given to you as a result of applying for the loan, but not everyone will necessarily have access to applying for the loan. So if you have not received any other further communication from the SBA that is above and beyond that $1,000 increment or whatever, then that is not the loan, that is the grant. So hopefully that helps.
Right. So where it says on the first page, EIDL advance amount, that is your grant, not a loan. So even though it says EDIL advance, what you're referring to as EIDLG, that's the same thing. The EIDL advance is the grant portion.
Okay, if we laid off one employee in mid-March, but used the January 1st to February 29th as a full-time employee period for reference, because it is closer to the payroll, but that employee was not hired back, does that work against us for achieving the full-time employee reduction safe harbor?
Did you rehire someone else? If the position is vacant and you made a layoff, then yes, it will count against you because it's a headcount reduction. That's my understanding of it.
Can you speak a bit more about the possibility of using PPP 100% for payroll expenses? Specifically, I'm a sole proprietor who is using the money for owner compensation, so I had been planning on 75% forgiveness for payroll. Is it now possible to achieve 100% forgiveness on payroll alone? Yes.
Wait.
Oh.
No. Because it's an exception. If you're the sole proprietor, it's not based on what you pay yourself. It's based on last year's Schedule C and that 850 seconds calculation. So no matter how many weeks you have right now, no matter what, you get that number at 8 weeks, regardless of what you paid yourself before this or during this. That's the amount that you can write yourself that's forgivable. Now from your business, you can pay yourself more. It doesn't mean you have to reduce your salary. Like if your business has income and you can continue to pay yourself, but this is the amount that you're just allowed to write yourself a check and count that as 8 weeks of pay. Does that make sense, Claire? Because if you're a sole proprietor, you don't have W-2. So that's the flip.
Does the 60/40 apply to everyone or just those who opt for the 24-week option?
The 60/40 applies to everyone, right? It's a across the board adjustment. So whether you choose the 8-week period or the 24-week period, now everyone gets a step down from 75% payroll expenses to 60% payroll expenses.
Okay.
So basically, if you were on track to hit 75, you're in great shape, right? You're just getting more flexibility.
Are we able to speak at all with regard to EIDL forgiveness if an organization received an EIDL advance and a PPP loan?
Okay. I think that is the same question of the EIDL advance is the grant, and the grant works against your forgiveness, right? So whatever the amount of your grant is, that amount is going to be taken off your forgivable amount and will be repayable in the PPP.
Someone is asking, they applied for the EIDL on April 1st and still haven't received the $1,000. What can I do? Your best bet is to try to contact the SBA to follow up on your application, assuming that you recorded the confirmation number while you were in the midst of the application process. That should help. Jill, I know you reached out to the SBA directly within the last few weeks and you were actually able to get in contact with someone, yeah?
Yes, the SBA, now that they're through the heat of the PPP, has started picking up the phone again. So if you want to find out if you haven't received it or you're not sure if you've received it, you can follow up if you have a confirmation number or your original application number. You can follow up and ask based on either of those and they can look it up for you.
To be clear, for sole proprietors, any qualified expenses have to have been expenses that were claimed on your 2019 Schedule C, correct?
Yep. That's the clearest way, right? That it was a business expense for you in 2019.
Exactly.
Yeah.
And even more so, I mean, if we were to go into 2020, then I would say the cutoff date as well is that February 15th, 2020. 2019 is the more impactful way of getting it forgiven, but February 15th also suffices based on all of the reading that we've been doing. How do I change to 24 weeks instead of 8 weeks? I received the PPP a few weeks ago, but I am closed due to COVID-19 restrictions. We don't have reopening date as of yet.
So this is one of those we don't know yet questions, since the SBA hasn't released the how it will be implemented, and we would estimate it'll take about a week. So if you're pretty close on the line, well, if you haven't started using the funds yet because you haven't reopened, then you have the time to wait. Your 8-week period isn't going to expire before you're able to do this. So if you don't have a reopening date, we assume the SBA will provide some type of mechanism for you to self-certify that you're using the 24-week period. But again, because it's just passed yesterday and it's just being signed today or tomorrow, we don't have those FAQs on how the SBA is going to facilitate this yet.
If our business received PPP funds on 4/27 and payroll was paid out for the 4/15 to 4/30 period on 5/1, does it make sense to create an alternative covered period that begins on May 1st if the payroll period begins earlier than the loan was received?
Let's see, we got the funds on 4/27. Well, technically that payroll period started 4/15, so you can't use 4/15 as the start date. You could use 5/1 as your start date for the next period, and push it back by 3 days to make it evenly within your payroll periods. But you can't retroactively, because you didn't have the money on April 15th, you can't use April 15th as your start date. It has to be a forward payroll period.
Jill seems to imply there was a drawback to opting into the 24-week period, and we might want to stick to the 8-week period. Are there trade-offs between the two?
I mean, on that one, we don't know yet. Because it's binary, if you're, if you were planning to use the funds, if you've actively been using the funds and it's very close, to go to a 24-week period, if you have one more pay period in there, that could make sense. I think this is a point where we're waiting to see on clarification of, is it, you have to wait to the end of the 24 weeks in order to do rehiring, or at the moment that you exhaust the funds and have hit your rehiring requirements, can you submit the application at that point? So it's more the issue of getting everything forgiven so it stops accruing interest and getting it cleaned up. But so far we don't know like the pros and cons between the two, other than you have to choose one or the other.
If my loan was, for example, 10K under line 9, and my self-employed owner compensation cost was 7,500, line 10, but expenses were 2,500, do I only get the line 10 lower amount forgiven? This confuses me a little.
Let's see. So I'm assuming by that 2,500, you mean non-payroll expenses. So that 2,500 would go on the calculation form of like the mortgage interest payments, rent lease payments, business utility payments. So the only thing that you would put is line 9. That's the only thing you'd have on this form, on Schedule A. So on line 10, you would put in your 7,500, and the answer would be, yes, you've met safe harbor, and your line 10 cost is 7,500. There's nothing else to do there. And then on line 1 of your calculation form, you'd write the 7,500. You'd put in your other expenses below that on lines 2, 3, and 4. And that's where you're getting to the full 10,000 number, because the forgiveness amount is what's on line 11 of the calculation form. That's your ultimate final number, versus what's at the bottom of Schedule A. That was very accounting-y. Yeah, so hopefully that makes sense. I hope it's not clear as mud. It's easier to do it when you're looking at it, but you're only going to have one entry on your Schedule A, and then the other expenses are going to be on the calculation form because they're not payroll related. Glad I printed that out. All right. What else have we got?
Okay. I was previously a nurse 20 years. I'm a textile and fashion student at the Academy of Art. I'm a textile artist and illustrator. Can I have support to begin my business? I understand that this is mainly about PPE.
PPP.
Yeah, I'm assuming that meant that was intended for PPP. So Lisa Barbas, if you could maybe just clarify exactly what kind of support you are asking about, we can get back to that.
Yeah, I think my assumption on that one is like, if you didn't have a business before February 15th, if you weren't incorporated, this loan will not be something that you can get, right? You had to have been in business. So the challenge is if you're just starting, if you weren't active in the business, you didn't have any revenue, even as a sole proprietor, you will not be able to access this assistance. But you may be, I don't know, I don't think you'd be eligible for unemployment either, if you didn't have any revenue. So.
Follow up to the previous question, 75% is still the maximum payroll forgiveness number for a sole proprietorship, not 60%? Sorry, just trying to be really clear.
Yeah. Yes. So I think one thing that we had in the previous version of this that I took out this time was it's it's not the 75 and now the 60 doesn't apply to you if you're a single person sole proprietor. Only that 858 divided by 52 number, that's your payroll number no matter what. So the 7565, you're right, this forgiveness application does not make that super clear, but there's a hard number dictated by your Schedule C that can be your payroll as a sole proprietor. And then there are expenses that you can add to that. But it's a very good question on if that doesn't add up to 60% in your total use. I mean, it should based on the application amounts. But if it doesn't, I don't even know. That's a very good question and something that we can look for clarification on. Because as far as we know, if you're a single, if you're sole proprietor, single person, that may be a gap in this application that needs to be clarified.
If we want to do the 24 weeks, when do we need to make the notification by?
We're not sure yet. I would look for more on that next week. My guess is that you will have to notify before the last day of your 8-week period, just so that they know not to expect a forgiveness application that you've opted into the other. But I know some of you are very quickly coming up on that number on your 8 weeks. So my guess is for people who got their funding really quickly in April, there'll be some kind of exception. And for those of us who reach 8 weeks a little bit later in June, there'll be some kind of opt-in mechanism. But that's, again, one we'll have to stand by on for when they clarify how this is going to be administered.
As a sole proprietor with 2 part-time employees who works from a home office, can I claim operation restrictions since employees have not been working because of stay-at-home restrictions? So far, they don't want to come back yet, nor do I want them to.
Are they, clarification on that is like, are they working from home versus physically working from the office? So if it's someone that has to physically be present in order to work, I don't know where you are located, but at least in Los Angeles, as of last Friday, they would be allowed to return to work. That is, if you happen to be in Los Angeles or Los Angeles County, that's a really good question for the Business and Workers Hotline. They have been an excellent resource locally in order to get questions like this researched and answered in terms of some of the reopening requirements and specifics. But in terms of that, if you've all agreed, I think if you agree as the business owner that you're not ready to reopen from a safety standpoint, it wouldn't be an operation restriction. It would just be, I mean, it is what it is. So there, I have a bunch of follow-up questions on it because it depends if you've been paying them as you go. Yeah, that one I would need some clarification.
Okay. Where are we at? Okay. I work from home and on my taxes, I claim 40% of my residential expense as an office write-off. I'm planning to use this model for claiming rent expenses for PPP. When I transfer a draw from my PPP account, should I make this amount match the total of my rent check, or should it match 40% of my rent check?
Claire, I know you do your physical rent. What is, we talked last time about how you are handling that, right? It's that,
yeah, so
you physically write yourself.
I physically, yeah. So through 2019 and even through this year, and even still, I have a fixed amount that I know can be written off. I mean, my math is pretty straightforward. So the $900 that I use to offset my rent through the business is just an automatic transfer each month. And I've just kind of left it alone. And so that's how I'm claiming it. I don't know if that.
So there has to be, from when we talked about this in the last session, it was that you have to be not just claiming it on your taxes as a deduction. You have to actually be paying yourself on a regular basis sometime before February 15th. You have to be paying something toward your rent. So if you establish that you pay actual dollars in rent for your home office, then that should be a qualified rent expense in this because you were doing it before February 15th. It should be allowed to continue because you've documented that you had a pre-existing rent agreement. Does that sound? Yeah?
Yeah.
That's what we talked about.
Totally. That's totally what we talked about. For everyone that's asking for the the PPP application or forgiveness application, we will be sharing that along with all the materials afterwards.
Drop it in the chat.
Yeah, she'll drop it in the chat as well. So this is a question actually, is the link to apply for, I know this is like I know at one point to apply for EIDL, that link was closed.
It is.
It's still closed, okay.
Unless you're an agricultural business, it's not available.
Okay.
They're only doing it based on retroactive applications up to the point they closed it the third week in April.
But that's not to say that, I mean, outside of SBA, and this was something that we did cover, especially in our last version or previous version of this webinar, there are other grants available outside of SBA, and there is a huge list that we did send out. So I encourage you to revisit that, especially towards the end of the session, and Jill covers that in that webinar. Okay, does government related include enforced school closures where school arts program, schools pay a share of cost they did not fully pay for classes for the year, including March, April, May, June, unpaid, but we continue to pay teaching artists who do additional work beyond classroom teaching. Can we submit for what we pay them because of a forced shutdown?
Sorry, I was doing the other thing.
Yeah, no, totally.
It's got a super whiny 4-year-old right now. Let me jump back over here so I can see what we're doing. My Q&A window back up. There we go. Okay, sorry, Claire, is this one still listed on the Q&A?
Yeah, it's the very top.
The top, okay. Government related.
Enforced school.
I would understand that as yes. If you were forced to close, then that would be a qualified closure. I don't know how it'll be handled in that you wouldn't have, if you weren't going to pay people over the summer, but for the period that you were supposed to be open and paying people, that would qualify as a government closure.
Yeah.
But so if you're applying for a new loan, if you're a 501c3, you could apply for relief based on this. If you're an informal program, then you would not be able to.
Okay. Reviewing line 8 through 10 and line 11, it looks like potentially only 75% can be forgiven. If the 75% payroll cost is changing to 60%, does that mean the form would be modified so only 60% can be forgiven?
Yes. Yeah, we're working under the assumption that anywhere it says 75, it will now be 60.
Okay, so I think because like this question keeps popping up no matter how many times I've written it. So we're gonna just answer this one live, and hopefully this squares up any lingering questions about the confusion around EIDG versus the EIDL. So the EIDG is the grant that you receive as a result of applying directly through the SBA for the economic injury disaster loan. Regardless of whether or not you get approved for that loan, you will receive a grant forgivable that's $1,000 for each employee with your company. If you're the only employee in your company, you will get that grant, and it is 100% forgivable. However, it doesn't mean that you will necessarily get approved for the loan, which is the EIDL. So if you received the EIDG and not the EIDL, any questions you get about the EIDL, if it is specific to asking you what that loan amount is, that is not the grant that you received in the amount of $1,000 or however many thousands of dollars you received. That makes sense.
I just put in the chat just to reinforce that EIDG is the same thing as EIDL advance. If it's EIDL without the word advance, it's the long-term loan, the 30-year loan, which is typically going to be somewhere north of $20,000. So if you simply filled out the form and got somewhere between $1,000 and $10,000 that showed up in your bank account from the SBA, that is this EIDL advance or the EIDG, and that is the number that you have to disclose on your PPP forgiveness form. If you got the larger loan that you're going to be using and paying off over the next 30 years, that does not go on your PPP forgiveness form.
So a follow-up to the question about 8 weeks versus the 24-week clock starting. This particular business is still closed, so should they hold off on paying any non-payroll expenses so that the clock doesn't start? And should they wait for the SBA Friday email?
Well, it's not necessarily that the clock hasn't started, it's that the clock will not go off, right? So your loan start date was your loan start date, right? You got the loan when you got it. And the whole idea was you were supposed to use all the money within 8 weeks. So let's just say you got the money on May 1st. You have 24 weeks from May 1st to use the funds. So if you haven't used anything yet, that's fine. If you want to start paying non-payroll costs, you'll need to understand like what that is in balance of hitting that 60% number, like know how much of it you can spend. But you could start spending the 40% that's allowed in non-payroll cost and reserve the 60% for when you can bring employees back. So I hope that makes sense. Yeah, everyone that has a loan, your clock is on. It's just a question of, does the clock stop at 8 weeks or will you be extending so the clock continues to 24 weeks?
Okay. I've been self-employed for nearly 10 years, but don't maintain a separate business checking account. Any suggestions of lenders who might be good to reach out to apply for a PPP? I bank at Union Bank and they're not accepting new applicants.
I've had a lot of people in the last couple of weeks go through PayPal. The fintech companies are doing really well at this. They have very clean applications. They don't have all the legacy bank stuff. So everyone that I've sent to PayPal in the last couple of weeks has been pretty happy. It's been straightforward.
Yeah, same with, I believe Square is another place.
Square's doing a really good job as well.
Yeah, and that's super fast application for folks. So, and you don't necessarily have to have used them, I don't think.
No.
You can just simply administer the loan application through them. My company was funded on 4/20, which happens to be the date of the disbursement of the 4/1/4/15 payroll. Is this payroll covered? Also, the coverage period goes till 6/14. Is the 6/1 through 6/15 payroll covered, even if the disbursement day will be after 6/14?
Okay, I'm going to split those questions. So the first is no, because it's the first day of your last payroll was before you got funded. So that 4/20 payroll, if you got your disbursement, it's the date that the money goes out to the employees. So if you wanted to use that payroll as the start of your 8 weeks, then you would do it based on the regular period, right? You could use that money that was paid that day as the start of your clock. If you don't want to do that, then you'd move the start date to the next day in the alternate period, and your next pay period will be what counted. So if you are trying to get into the 8-week window, using that first date as the first date of your loan period, that could make sense. And definitely on 4/20, if the money was paid to employees on 4/20, that's an allowed start date and allowed use. But if you wanted it to cleanly be the next payroll period as your start, you would just make your start date the following day and your first disbursement would be your next pay period. And then the other piece, the payroll coverage goes to 6/14. Well, if your company was funded on 4/20, then your 8 weeks, yeah, okay, that makes sense. Your 6/15 payroll, you'd have to pay out to employees on 6/14 to make that work in 8 weeks. So you just have to nudge your payroll ahead by a day, which you are allowed to do.
Sorry.
No problem.
I
just realized we have like 5 minutes left, so we'll get.
No, I know. So how would the 501c3 be able to apply for other relief? I'm assuming grants. And then we also have another question about applying for additional loans and grants.
Okay. So 501c3, there are grants and loans available. Technically a 501c3 can apply for, if you had an EIDL application in, you are eligible for that program. The other government loan programs won't be available to you. You could use, if you are in California, there's a program called iBank that's from 1 to 750 employees, and you can be a 501c3. That is a loan program, but it has pretty generous terms, and the loans are up to $50,000. And because they're done through a development bank, they happen pretty quickly. So that could be an option for you. I would look in your state, because if you're not in California, other states have similar economic development bank setups that have their own longstanding loan programs. And that works similarly. That's one that's just kind of come to the fore during this period. People didn't use those a lot unless it was recommended, but those programs are in place. Other things, yeah, I would just consider looking at CCI Arts has an amazing list of grants that are available, and Allison has done a great job of keeping that up. So basically any arts grant that's out there, they're scouring for and putting on the list. So Allison usually sends that summary out with our recaps.
Okay. Banks in California for PPP loans.
Credit unions, I mean, to go specifically, it's so bank by bank. Some of them are still working with existing customers. Some of them are open to new customers. But in terms of like actually working with a physical branch bank, a lot of them have stopped issuing new loans, or there are some caps on how much they can issue. They may have capped out relative to their own bank. So there's a gusto list of banks that are still taking new customers. But only had a handful of banks on it as of like a week ago. So someone had put in the chat, California Bank and Trust. So thank you for adding that. Yeah, let's see. Okay. So if you can't find a bank, again, like these national fintech organizations, also Cabbage and Fundera are working on finding you a bank, so you can apply through them and they shop it around to banks that will underwrite it. So that could be another option. I had several clients use those and kind of get through the process, and it worked for them. See, Allison has come back on. Does that mean my time is up?
Getting close. I just want to point out that in the chat, in case folks are on phones and not able to see the chat or something like that, we've dropped in all kinds of helpful links. And so when I do reach out and send a follow-up email to everybody who registered, you'll be able to, I believe there's a chat the chat shows up on the side of the screen where you'll be watching the video. I usually will try and take the Q&A and turn it into a document that you guys can review and see all of the typewritten responses that weren't addressed verbally. And we'll also include the presentation, and we'll try and include all the requested links. If they weren't in the presentation, we'll try and include those in our email to you. I also put in the chat, and I will include in my email a link to our feedback form. We really appreciate your feedback, and I'll share that with both of the presenters, and we appreciate your comments and all of that. And I also want to point out that, I did drop in CCI's emergency resources document that Jill was referring to. So that's for any currently active COVID specific emergency funds, but there's of course all kinds of types of funds available to nonprofits and to individual artists and stuff. So check out New York Foundation for the Arts for very broadly if you're new to applying to arts grants. But if specifically you're looking for emergency resources, do check out the list. If you also go to cciarts.org, you'll see it listed under news and views on the homepage. But I dropped in the link there to tiny URL to CCI emergency resources. So that's great. Do you guys have anything you want to add before we sign off?
Keep an eye on the news for how that 24-week period is going to work, and also on whether that 60% cliff is going to go away and it just becomes a percentage forgiveness again. Those are kind of the two big things. Also for house self-employed, if you can opt into 24 weeks to use more of the funds to pay yourself for a longer period. So those are kind of the three big things. When we see updates on that, we'll send them over to Allison and she can send them around to the list. Yeah.
I'll also I'll list resources on the event page. So where you originally signed up for the workshop, there will be some links there too. Sometimes emails get lost in spam folders. And I also just wanted to point out too, the other workshops in this series are useful. I mean, in some cases, the information we shared in prior weeks are now outdated, but there's also some great information that Jill shared, for instance, in the last workshop, ideas for generating revenue if you did not get approved for some of these programs, these relief programs, right? So other ways that you can think about generating income quickly as a sole proprietor, as a small arts business, any of that. So you might just check those out in general. And they also might help clarify some of the things that maybe we skipped over kind of quickly today. If you go back to the beginning, just keep in mind that that was the information that we had at that time and it's changed. So we appreciate you all spending time with us today, and we'll be in touch with more resources.
Thank you, everyone.
Thanks,
everybody.